Hi, I am Anna. I come from www.ntvforex.com. Dude, where's my Bitcoin? http ntvforex.com news ID FE1DE7 7/16/2020 7:36:58 AM. Twitter overshadowed the headlines on an otherwise positive New York session overnight, but for all the wrong reasons. An alleged hack of the Twitter accounts of the titans of the political and corporate world saw a diverse array from Barack Obama, to Bill Gates, to Apple Incorporated, all generously offering to double your Bitcoin holdings. Just send your initial investment to this link first. Elon Musk will probably be happy that, for once, a controversial tweet by his account won to result in a phone call from the SEC. Bitcoin marketing usually leaves one feeling like they've bought a used car with not so genuine low mileage and needing a shower, but it won't be Bitcoin that suffers. Twitter stock was only down by around 4.0% in aftermarket trading. But depending on where in the tweeting food chain the security breach came, Twitter could face some vast issues. The wealthiest corporations and people in the world have bottomless legal pockets. Notably, President Trump wasn't amongst the hacked. Perhaps the hackers thought the Bitcoin fraud would be too mainstream and unbelievable for the presidential account, given its usual fare. Tweets aside, market sentiment was dominated by vaccine positivity. Wall Street stocks continued to climb even as the COVID-19 count in the United States rose faster. Risk-sensitive currencies also rallied, although the euro paused for breath ahead of the ECB meetings today and the EU summit tomorrow to thrash out the details of the European Pandemic Recovery Fund. I do believe that there are grounds for optimism on the vaccine front though, simply because of the number of pharma heavyweights across the world moving to Phase 3 clinical trials. One of those compounds will float to the top, and a Q4 vaccine remains my black swan for 2020. OPEC has decided to pause its headline 9.6 million barrel per day cuts at the end of the month. OPEC will engage the pre-agreed tapering phase, which sees the headline cuts fall to 7.7 million barrels a day. Initially though, that number will be just over 8 million barrels per day as Iraq and Nigeria make up for their earlier compliance failures. Oil has held up remarkably well and can probably thank the positive vaccine sentiments boosting financial markets generally for that. Asia has already had a hectic morning on the data front. Australia added a much higher than expected 210,800 jobs in June. On the surface, it implies that Australia is bouncing back rapidly from its COVID-19 lockdowns. The headline though flatters to deceive. Full-time employment fall by 38,000 jobs, with part-time accounting for the entire increase, rising by 249,000 jobs. The unemployment rate also rose to 7.40%. Australia may be recovering, but the rise is uneven and seemingly limited to those part-timers quickly cast aside when the shutdown began. The Bank of Korea BOK left rates unchanged this morning at 0.50%. The BOK had already signaled that it was done with easing, having one eye on the politically unpopular spike in Seoul housing prices. The decision should not be market-moving. China released its Q2 GDP, which showed a surprise jump of 3.20% YoY. Well above the market's forecast of 2.50%. Industrial production rose 4.80%, slightly better than expected. Worrying, however, retail sales fell unexpectedly to 1.80%. Again, the headline number flatters to deceive. GDP rose, as did industrial production, but the Chinese domestic consumer appears to be more reluctant than anticipated to go outside and consume. China's export markets are its crucial challenge. The question being, is China ramping up production of export-related goods that end up stored on the docks awaiting a new overseas home? The price action on mainland stock exchanges today suggests that these concerns may have solid foundations. Bank Indonesia will announce its latest rate decision at 1,530 SGT today, with the market near universally expecting a further 0.25% cut to 4.0%. The Indonesian rupiah IDR has fallen this week from 14.400 to 14,610 this morning, even as the US dollar has weakened elsewhere. Part of that may be related to the BI's directly monetizing part of recent government bond issues. More likely, the IDR has fallen in anticipation of the cut in rates by the BI. The IDR has fallen from 13,900 to 14,610 since mid-June. But the scale of its overall rally since the mid-March collapse to 16,800 is enormous. The market's faith in the quality of its finance ministry and central bank team has kept the sharks at bay. That will give the buy room to cut today, and in the months ahead. The Thailand finance minister has announced his resignation with immediate effect. Although that appears to have been anticipated, the Thai baht has come under direct pressure, falling 0.50% versus the US dollar apart from the ECB, where no change to its 0.10% benchmark rate of guidance is expected. Today's international highlight will be US retail sales at 2030 SGT after May's virus-induced rebound by 17.70%. Retail sales are expected to climb by a more modest, but still impressive, 5.50% in June. Worries will temper any exuberance on concerns that the explosion of COVID-19 across the US Sunbelt will materially impact the July number. Well-founded, in my opinion. Also, initial jobless claims and continuing claims, also released tonight, stubbornly remain around 1.3 million and 18 million respectively. Friday's focus will be the European Union Leaders Summit, with the details of the €750 Pandemic Recovery Fund expected to be finally hashed out and agreed. Markets have already priced a positive outcome into the EUR-USD this week, with an expected agreement likely to boost EUR-USD through 1.1500. The critical risk being that European squabbles between the Frugal Four and the Club Med Massive result in no agreement. Like a bad Enid Blyton book titled, The Frugal Four Go to Brussels, it would set up a potentially nasty downward correction for the euro currency into the week. Equities are sagging in Asia. A generally upbeat session in New York has reversed course in Asia, with regional equity markets easing lower this morning. The chief culprits appear to be the look below the hood of the Chinese and Australian data releases this morning, and threats of further travel bans on Chinese officials by Washington, D.C. New York's session was positive, as the coronavirus vaccine hopes lifted stock markets. The S&P 500 rose 0.91%, the Nasdaq rose 0.60%, and the Dow Jones rose 0.86%. The Twitter hack, coming after market, has seen futures on all three indices ease by around 0.30%, adding to the gloom in Asia this morning. The Nikkei 225 is down 0.75% this morning, with the Kospi lower by 0.60%. Mainland exchanges are having another tough day, as retail investors retreat after the recent oversized gains, amid signals from government markets had risen too far, too soon. The Shanghai Composite has fallen 1.45%, with the CSI 300 1.70% lower. The Hang Seng has declined by 1.25% across the region, Singapore is 0.55% lower, Kuala Lumpur is flat with Jakarta the only outperformer, rising 0.45% ahead of the buy rate decision this afternoon, where a cut is expected. Australia's All Ordinaries and ASX 200 are both 0.75% lower after the drop in full-time employment. The overall move looks corrective in Asia, and Europe may not take such a negative tone this afternoon. Vaccine hopes are increasing and based on sound progress rather than hope, and this should underpin equity markets in Europe and North America today. The US dollar claws back some losses in Asia. With US aftermarket equity index futures leading stock markets lower in Asia, the US dollar has clawed back some of its overnight losses. Those losses were driven by vaccine hopes, lifting sentiment, with trade-centric currencies such as the Australian and New Zealand dollars outperforming this morning. The dollar index has risen by 0.10% with EUR-USD almost unchanged at 1.1405. Across regional currencies though, the US dollar has climbed. The greenback is 0.20% higher versus the CNY, SGD, and MYR today. Political concerns have seen the Thai baht fall, USD THB rising 0.50% to 31.693. With the finance minister resigning, USD THB has now climbed further away from its 100-day moving average at 31.460, which has capped THB rallies this past week. MIR, IDR, and THB have all given ground quietly this week, but it is the THB that looks most vulnerable, with a rise through 31.8000 by USD THB signaling further losses for the bot. AUD USD climbed to 0.7040 overnight, breaking resistance at 0.7000 before retreating. This morning AUD USD hovers at 0.6990, disappointing V-shaped recovery traders. At this stage, AUD USD looks more to be gathering its breath, than beating a retreat on a false break. That said, a move through 0.6980 likely deepens the correction. Ideally, AUD USD should close above 0.7040 by tomorrow night to strengthen the case that the US dollar rotation trade has restarted. Key to that premise will be the price action on EUR USD, which has led the charge higher this week. Assuming the EU summit progresses well tomorrow, EUR USD should grind its way towards 1.1500. Improved sentiment offsets OPEC production increase. Oil prices ground out a slightly higher close overnight, reversing the losses after OPEC decided to taper production cuts starting in August. OPEC will reduce cuts to a previously agreed 7.7 million barrels a day until the end of the year. Oil prices initially fell but helped by a surprise fall of 7.5 million barrels in official U.S. crude inventories, regained positive territory. Brent crude rose 1.30% to $43.60 a barrel, and WTI rose 1.10% to $41 a barrel. Both contracts are nudging the upper end of their one-month ranges now, and assuming sentiment stays positive, look set to retest critical resistances at $44 a barrel and $41.60 a barrel respectively. Brent crude still has a $1 gap between $44 and $45 a barrel on its daily charts, the legacy of its mid-March capitulation. A move through $44 a barrel, therefore, should see a rapid advance to the later price level. With production's cuts tapering though, and doubts about U.S. growth due to COVID-19, oil prices are much closer to equilibrium now, which explains the OPEC decision. Further gains are possible but exceeding the 200-day moving averages for Brent at $48.40 a barrel, and WTI at $43.60 a barrel, are likely to be bridges too far for now. In directionless trade in Asia, weaker stocks and a stronger US dollar has seen both contracts ease by 20 cents this morning. Gold continues to impress. Gold traded in a $10 range overnight, finishing at its highs at $1,810 an ounce. Downward pressures from firm equities offset by lower US yields and a weaker US dollar. Although the headline figure suggests a quiet day, gold's price action and fortitude at these levels continue to impress. The longer gold consolidates at its range highs, despite the price action in other asset classes, the move likely is that the next significant step will be higher. Should the US dollar weaken into the end of the week, that may come sooner rather than later. Gold has support between $1,780 and $1,790 an ounce, with only the loss FO the former inferring a deeper correction. Resistance remains at last week's highs around $1,819 an ounce. A daily close above this price will be yet another bullish technical signal, with no resistance on the charts until $1,920 an ounce. Subscribe our channel to receive the news as soon as possible. Thank you for watching.